Welcome back, everyone. My name is Jeff. Disney stock has been on a very impressive run lately. And really, guys, there's been two things at work here that has helped push Disney up to new all-time highs. November 14th, Disney traded itself up over $150 a share for the first time. That pretty much has seen a strong sell-off since then. I guess most of you would probably wonder, why did it sell off from $150 down to about $144 before seeing a recovery? Guys, that is where a lot of call options got in the money and a huge sell-off occurred. So when you take a step back and look at it, Disney's only up about 6.7% over the past week, but I think this stock is really positioned well to continue running. All kind of depends on how you look at it. So in this video, what we're going to talk about the two main catalysts that help push Disney stock up so high. We're going to talk about where the stock might be going from here, what you should do as investors. I think patience is always a virtue. Okay, so like right now, stocks I bought back in December when the market tanked down, it hit really low. I'm seeing that patience I had, not to sell those positions, but to continue holding and building them. Those are really paying off today. Made some pretty big moves in the MJ market myself today. I have all of that in Trade Alerts Pro, so feel free to go check that out. First link in the description. Let's talk about Disney stock. Let's get started now. So do me a favor, guys, real quick. Make sure to drop a thumbs up on this video. I appreciate all the support. And make sure to subscribe to the channel if you have not done so already. All right, so first things first, let's go back to a magical time of December 25th, 2017. Guys, I got up early that morning and published a video about Disney stock. This is one of the first YouTube videos I ever put out, and I looked at this like this was my Christmas present to everybody, to go out and buy Disney stock. And of course, at that time, Disney was still trading at $100 a share, actually trading quite a bit under $100 a share. And towards the end of that video, I made a 5-year price prediction where I said Disney will be trading at easily $200 a share by the end of 5 years. So my prediction still stands. We're about halfway there. This is why you always watch Worth More Investing and you ignore all the other channels. So this run all started back on November 7th, 2019. Disney was up roughly 4% as the networks and film outpaced the Q4 beat, okay? So they easily cleared Wall Street's profit bar in Q4 earnings, paced by strong gains and of course its TV networks and film studio juiced by its Fox acquisitions. This was very impressive to me. Revenues grew 34% year over year to $19.1 billion. For the fiscal year, revenues were up 17% to $69.57 billion. 2019 has been amazing for Disney. Now, revenue by segment, this is the part I really want you all to focus in on. Media networks was $6.51 billion. That was up 22%. Parks, experiences, and products was up $6.6 billion. That was up about 8%, not really that big of a deal. Studio entertainment was up about 52%, but direct to consumer and international, $3.43 billion. That was up 316%. So Disney is not only growing its brand, but the in-house investments are showing amazing return. When it comes to brand strength, Disney ranks amongst the best companies in the world. This is a company that goes after every single opportunity to make money in their particular markets. Broadcast was an unexpected strength in media network revenue, coming in as well ahead of schedule at $2.27 billion. So the earnings report was immaculate. It was a great earnings report, rock solid. Really, you would have to dig through this thing hard to find anything wrong with it. And as a result, Disney stock started to trade up. Then on the 12th, I actually thought that Disney was going to take a dive because it was a pretty bumpy launch for Disney Plus. I can speak to that myself. There was a lot of technical issues. A lot of platforms that would give you a login and a password. It simply would not let you log in and use the service even if you already signed up. So there was a lot of cross-platform problems, a lot of technical issues, and more than 7,000 reports of connection problems were reported. But that ended up really just not mattering at all. Disney gained on strong early streaming demand. Says the consumer demand for Disney Plus streaming has exceeded its very high expectations. And although we all know that Disney Plus launch has been on the calendar for a very long time, I think this was a very well done move because a company should not launch until they have a very attractive plan. Obviously, in a nutshell, Disney Plus subscribers can bundle the new service with Hulu and ESPN Plus for $12.99 a month. which just so happens to be the same exact price as Netflix's most popular plan. So this is really an attack on Netflix to outperform them. The news broke very soon that there was 10 million day one streaming signups for Disney Plus. Ever since then, the stock has been on fire. Okay, so it really started with a strong earnings report, a little bit of shakiness at launch, but then 10 million day one streaming signups has pushed this stock to new all-time highs. And guys, what people and institutional investors are really buying into is where Disney can go from here, what its possibilities are, and just how much growth we are going to see in this area over the next, I would say, 3 to 5 years, maybe longer than that. Just don't get too far ahead of yourself. Don't think the next earnings report is going to be the best one. I think this is a very good start. They're going to have a lot of technical difficulties and glitches, but the future is extremely bright. Disney is one of the strongest buys on the market. There's no doubt about it. And I just want to add this little part at the bottom. Disney has a 5-year target of reaching 90 million subscribers, at which point rival Netflix is to have about 300 million. So the long game is roughly 90 million subscribers. Netflix claimed more than 60 million paid domestic subs and more than 97 million international subs. So they're a little over 10% of the way to their 5-year target. That is amazing. And I think this big jolt in Disney stock is very warranted. So where are we going from here, guys? I think if you look at Disney's past, okay, I have the 6-month chart pulled up right now. Back in July, Disney ran up to $148 a share. Then it pretty much did nothing but lose momentum going into October and even early November, okay? That's when they had this blowout earnings report. The stock run back up. My point is, you will have plenty of opportunities to buy into Disney stock. The real move, like I said, guys, and like I said, not to toot my own horn, this is the true idea behind investing. The real move was to own this stock, 1, 2, 3 years ago, okay? So I started buying stock in Disney at the very first rumors of Disney Plus, okay? Once I knew it was a real thing, they were really developing this. This was a big content package that was going to rival Netflix. I've made trades in Disney before, but I decided to go long, take another long-term position in Disney. And guys, it is looking fantastic. I don't want to sell it. And if it comes down again to a low enough price, I will probably load the boat and buy some more. I have a couple of different stocks I really am loading up right now. The danger with that, keep in mind, we're at all-time market highs. So if we do get met with a correction pretty soon, most all of your stocks will get corrected with it. I don't think you have to be in a hurry. I don't think you have to run out and buy Disney here into these highs. I think if you're patient, you will get an opportunity very soon. Just don't feel like you've missed out on anything. What goes up must come down. That rule pretty much always applies. Figure 2, let's slide over here to tip ranks and look at what the average analyst rating and price target is on Disney. As you can see over here to the left, guys, it is rated as a strong buy, and I'm going to have to go ahead and agree with that. Now, again, I'm not an analyst. I don't work for a hedge fund, and I'm not responsible for millions and billions of people's dollars, but I will give you my personal rating on this stock. Yes, it is. I agree. This is a strong buy. My price target is a lot loftier than this, but then again, like I said, it's about 3 years out from where I forecasted. Right now, the current analyst price target on Disney, the average runs about $154.27, with 175 being at the top of the range, 130 being at the low range. Now, something about those low price targets I've always noticed, they're usually a little bit out of date, okay? So that's one thing I do want to look at. If somebody has a price target on a stock, or they have a rating on a stock from, let's say, I don't know, November 2018 or something, I'm not going to say you should avoid it, but I like to pay attention to the more current price targets. And we can take a quick look at some of the most recent upgrades in Disney. Guggenheim gave it a buy rating 11 days ago with a $151 price target. Evercore ISI reiterated a buy rating, $155 price target. Wells Fargo buy at $167. That is the biggest one I've seen. UBS is a buy that was reiterated 13 days ago at $155. So you can see, which I do think there is quite a bit more upside on Disney stock. Pretty much all of the analysis is very bullish on it. Like I said, it just kind of ranks with some of those power stocks, your Apple, Google, Amazon, Facebook, some of those stocks. There's really no negative coverage out there on it, and Disney is just an absolute must-own stock. So that's all I got for the video, guys. Real quick before I do log off, I did want to point out, if you were not aware, Disney does pay a 1.19% dividend yield, and they pay $1.76 yearly dividend. So like I said, when you're holding this stock at a plus 50% gain, somewhere in that range, you know, that 1% dividend means a whole lot more than maybe a stock you're holding at a loss, or maybe a small gain, but you're yielding maybe 2 or 3%. That's how they usually get you. These growth companies are going to pay you a lot more with earnings and less dividends, okay? Because the true growth stocks outperform any kind of dividend stocks. That's all I got, guys. Thanks for watching the video.